of there you go. All right. So look, like I said here, there are a lot of videos here, and obviously every single morning we do record so that people don't watch them back. Now, a lot of them, sometimes I'm naughty, I don't label them. All right. But I need to, here we've got Industry Lies Unveiled. We've got Russian Doll Theory, Understanding Trading Will Change Your Life, how to get out of profitable trades. This video will fix your biggest trading problems. We've got Don't Take the Bait, it will burn you every time. These three things will change your trading forever. Keep it simple, stupid. Understanding sessions. Okay, so there's more. The truth about forex trading revealed. Step-by-step back testing. This was a good session we went through. Obviously, looking at how to back test. When structure, time frame, and time aligns. And so some of them I do label, so I'm not terrible. Trying, all right. But we should be recording now, I believe. We should be recording now, and therefore we'll have another session. So, as I said, our Russian doll theory. Our Russian doll theory is very, very simple. Just understanding. It's simply understanding higher time frame narratives and understanding how these markets are fractal. Now, look, we're trading here Forex, and there's lots of other things that you guys can trade, okay? And we are going to start moving on to doing other sessions in regards to stocks, other sessions in regards to futures, etc., options. But the bottom line is that what we're teaching here is the fundamentals of all markets, the fundamentals of your supermarket, the fundamentals of, the local, Dagenham market, Wembley market. They're all the same, yeah? They're based upon supply, they're based upon demand, they're based upon herd mentality and psychology. They are all the same, okay? So I'll have a look at this market here. Ever since 2005, this market has been bearish, making lower lows and lower highs and lower lows and lower highs. That is not my opinion, okay? That is not my opinion. That is fact. Now, there's not a lot of things that you can say in the market in regards to future predictions, which are going to be factual. You can't say that XYZ is going to happen in the market. Yeah, because if you know, then you should put every single penny, not only that you have, you should go around and phone the family and scrape out every single penny that they have and their friends have. Yeah, and you should rob and steal, and you should sell every item of your belongings that you have, and then place it on wherever you know the market's going to go and make an absolute killing, make trillions, go and buy a small island somewhere, okay? Nobody knows. Yeah, it doesn't matter what it looks like on YouTube. Doesn't matter what the course sounds like. Nobody knows, okay? But people use an edge, their technical analysis, fundamentals, understanding of the market to be able to make some decisions, okay, of where things might go. So therefore, I'm looking at this market all the way back to 2003, and the market has been making lower lows and lower highs and lower. Now, some are going to say, Jay, because I've seen other educators, and they're like, they go back a couple sessions. That's all they want to look at. And I thought that's fine, it's good for them. But for me, if I'm going to invest in this market, which is GU, could be any market. It could be, Sister Abana's business. It could be oil. It could be gold. It could be anything. If I'm going to invest my hard-earned money into this, I need to know what it's been doing. I don't need to know what it did yesterday. I need to know what it's been doing. Yeah? So on that basis, that's why I need to go and look back all the way to the bigger Russian. Now, this is my largest Russian doll. Have a look what we're talking about. All right? I've seen it multiple times, but in my opinion, I've seen the way it's helped newcomers. It's already highlighted there because we've been clicking every morning. How it's helped newcomers just understand, what we're talking about when we say the market is contained within a larger market, and that larger market is contained within a larger market, and that larger market is contained within a larger market, and so on and so forth. Okay, let's go and find a nice big picture. Go here. Let's do this. Let's open this in a new tab. Let's get rid of this. This is the markets for me. This is a clean understanding, a visual representation when it decides to load, because I do have a few windows open. Looks like my computer's struggling. struggling. All right. My internet connection is pretty poor as well. Whoa, what's going on there? Well, I didn't want to go to this page. I just wanted to open the image. Oh, I know, I made a mistake. All right, this is the markets. All right. So when you're down here in your 2-minute time frame, just understand that 2-minute time frame, 1-minute time frame is contained within the 5-minute, and that 5 minutes contained within the 15, and the 15 is contained within an hour, and the hours contained within 4 hours, and the 4 hours contained within 12, and 12 is contained within a daily, daily is contained within, a weekly is contained within a monthly, etc. Now, of course, these markets can change behavior. They can change behavior, but more times out of 10, they stick to what they know. They stick to what they've been doing. But when I look at my GU over here, and I see that my GU has been, look, is it a coinky dink? That, look, if I was to rewind this chart, okay, gone a little bit far, but let's play it forward a bit. Let's play it forward a little piece. Okay, I ain't got a week. Changed it. What's this now? I've changed it, put some extra stuff in it. Jump to, how do I do that again? Do you want to exit bar replay? Yes. Let me rewind it again. Stop it here. Okay. Is it a coincidence that the angle of incidence of this market has been trading down within? If I touch these two data points, because that's what they are. These are historical data points. What am I talking about? Ping. These are data points. Yeah, if I pull out these data points, like so, however accurately I want to draw it or not, this is fine for now. All right, if I pull out these data points, is it a coincidence that this market sticks within that data point, sticks within that trend? Is that a coincidence? It's not a coincidence, because if you understand the markets are moving. Don't know why this isn't playing. God knows why it's not playing. Oh, it is playing. And the markets are moving based upon so many factors, but one of them is a herd mentality and a psychology of people understanding that that's the trend. Now think about any trend. Yeah, think about it like a clothing trend. Everybody's wearing baggy jeans. So when you start going to the shops, you know what you start looking at? You start looking at baggy jeans. Yeah, unless you're somebody who likes to think outside the box. When everybody's zigging, you zag. Yeah, my computer's even struggling to play it back. So I'm gonna just shut down some windows, I think. Okay, I've got quite a lot of things happening in the background. Let me do that then. You know when you've got work that you've been working on, you just don't want to just start again with all the windows. Let's do that. Okay. All right, so we've got a lot of other stuff going on as well. Let's close down this. All right, so what happens? Oh, sorry. Sorry, guys. All right. So what happens is that you start looking at baggy jeans, yeah, because there's a trend going on, and you want to be as part of the trend. Or a lot of people like to be part of the trend. All right. So when they get up to here, they go, "Oh no, it's baggy jeans time. We've seen the trends coming down here," and they stick to this because there are sellers or there are participants in the market who can see this trend line. Do you understand what I'm saying? They understand that this is the angle, that this market is bearish. So when price gets up here, they get a bit, oh, I think it's time we sell. I don't know if it's going to break outside of this trend. And they say, let's sell and take some profits. Yeah. Like there is this psychology that runs, it's an underlying theme of any marketplace. Like go to a market. Yeah. Let me show you something. Let me explain this to you, yeah, in a way, in another way, okay? Have you ever gone and you've gone to a market and they've got like, you've seen like a guy on a mic and he's selling like, I'm talking about a proper like market, like a Sunday market, like a store. There's a guy on a mic and he's selling goods, like he's pretending like to say, "Oh yeah, guys, we've got an air fryer here, blah blah blah." Has anyone ever seen that at one of these markets where they've got like a guy on the microphone selling these products? All right, like he's selling items. Now, do you know what they do? They make their own people huddle around what he's doing. and bid and create this like, oh yeah, I want that. Oh, what is that new? Is that new air fryer? Because the mentality is when they see is when a crowd starts to form and they see this activity, is that people, they don't want to miss out. There's a FOMO. There's a FOMO effect. Oh my gosh, look, they're selling air fryers and everyone's getting them and everyone's getting really excited about this. I might as well have to get my air fryer. This is pure psychology. This has got nothing to do with the fact that the air fryer is a good price. It's got to do with, you like the way that the guy's selling it. They sold you on all the features. This is pure FOMO psychology. There's a crowd forming around this guy. Everyone's quite excited. You're thinking to yourself, why aren't you excited? You should be excited as well. And it's the same thing that happens in these markets. So now if you understand this, it can help to color your decisions. Okay. Now, the market can do whatever it wants to do. Yeah. Like, even though we might turn around and say, yep, this is trading within this range and blah, 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 the market can decide to surprise you today because the world changes. All of a sudden, now man are wearing tight jeans, or if you've seen now, it flares. Yeah. Flares, Like, I don't know, a few years ago, who would have thought to say man to be out here rocking flares now with flared bottoms? Yeah. Things do change. New trends start. And now everyone's wearing flares, and forget about straight jeans. And it's not just baggy jeans, boot cuts. It's now flares. So things do change. Yeah. But when they change in the markets, they will give us confirmations. There will be clear visual representations that things have changed, i.e. breaks in structure, i.e. Changes in character of the market. Because right now, if this market started to do this, have a look. Well, this angle that I've done in here, coming down here, I would have to change. I'd have to say, okay, something else is going on now. Let me draw some lines like so. Yeah, that's what I have to do, because the market has shown me, not my opinion of what the market's going to do next. The market has shown me via factual data points that it's doing something else. Okay. All right. So we're looking here. Now, let's team this up with some sort of fundamental information. All right. We have been hearing from a fundamental perspective that, the United States are not necessarily going to, cut rates. All right. Which adds, kind of strength to their currency. So if we're looking at GBP USD and something's getting stronger, we relate strength to weight. All right. As in, if you're thinking about like a scale. Yeah. So we've got GBP USD on one side. This is it. G over here. That's a G, believe it or not. And we've got US dollar over here. We relate it to like it being on a scale. So the stronger one gets, the heavier it is. All right. Now that obviously there's lots of factors to do with that. I mean, what's happening with G on the other side, what's happening on the other side of things has a factor. If this getting very strong as well, it may balance it out. Oh yeah, it might outweigh this side. But by and by, we're looking at those type of things. Now, like I said to you yesterday, and before the session started, I wrote, my ideas about these pairs, and we looked at it. Now, let's zoom in, all right? Because we're looking on a weekly time frame at the moment, and yes, we can also look at the Dixie, the dollar index. The dollar index is going to tell us some information about these markets, just like we can look at the BIXI, which is the British pound index also, all right? And even better still, have a look. We can actually superimpose these things on our charts, right? So we can superimpose the Dixie over here. Let's just use, I don't know which one's a good one. Let's use one at the top. Okay, and we're also going to superimpose the BXY on the charts also. Okay, so have a look. The BXY, which is the blue one, is an absolute carbon copy, yeah, of our GU. Okay, and we can see them being complete opposites. So therefore, look. When this is low, look at this. This is backing up what I said. In fact, I think I can actually hide the currency. Can I hide it, I believe? Yes, I can. Now, this is amazing to look at because this is showing you exactly what is going on with GU. Look, the orange one is the Dixie, the US dollar, and the blue one is the British pound. So when this is high, i.e. it is strong, we can see down here that the British pound is weak. Let's go back to my analogy about a scale, okay? So if US dollar is strong over here, this is gonna be a U. Oh, I'm gonna do it properly because I don't know what's going on with the writing. All right, let's get rid of that. If we go over here and we type in USD over here, God knows why it's not wrapped. What is wrapped? We've got USD over here, and then on the other side of the scale, we've got our Great British Pound. I don't know how great it is anymore, but there you go. And we're saying that USD is strong, and then we're thinking about it as weight. As when it's strong, it's going to be heavy. So this is going to be our scale, like so. Okay, this is our scale. And therefore, when this is strong up here, and Great British Pound is weak, as in lighter, we're expecting that GBP USD to be going in this direction. Okay, and therefore, if I now unhide the actual pair, which I actually don't know how to do now I've hidden it. Let's go and have a look here. There you are. Look, we can see how at that time, that point, the market was going down as the US dollar was gaining strength, and the pound was losing strength. Okay, now that shows us how we can look at these pairs, because they are, derivative products of one currency against another currency. Okay, now someone can sit here and we can mark up, and we can try and mark up this whole, US dollar pair. This whole the Dixie itself, actual US dollar, and come to some conclusions of what we think the market's going to go and do in there. Can do. Yeah. It gives us some inkling of what's going to happen in the markets. Okay. But, the Dixie is good because the Dixie gives you an overall general opinion of what's happening with it. And remember, the US dollar is the currency of the world at the moment, even though everyone's trying to change that. It is the currency of the world. So if I understand what the Dixie's doing, I also know what UJ may be doing. I know what Euro USD may be biased on Euro USD and all of these other pairs. Okay, I do. Okay, but for now, and it can give me some inkling into our indice market, because we understand that there is a correlation between the strength of the US dollar and indices. When US dollar is very, very expensive, it makes foreign investment into US companies, i.e. the US 30, it makes it unattractive because it's very expensive. Okay, so therefore we may see our indice, have a look at our indices. Let's try and put that in there as well. Let's superimpose that as well on top of our screen. You see, and these are things that you can do. It's not all about just hitting the button. It's about always trying to educate yourself and get a better understanding of these markets. All right. I did put the US. Oh, there it is. All right. So look, as this US dollar from here started to fall in value, don't look at how far they look, because they're being superimposed on different ratios because of the value. That's why you've seen this side has turned to percentages. So don't look at the fact that this looks massive and this looks small. Just look at the fact that from here to here, the price is falling. The value of the US dollar is falling. Yeah, getting cheaper. So therefore, if US dollar is losing its value, then foreign investment, it's more attractive for that money to come in and to invest in US companies because they're getting more for their money. Does that make sense? Does that make sense in regards to these correlations? I'm not trying to say that is the be all and end all, because there's many other factors, but these basic factors, does this make sense?
Yes, definitely.
Okay. So at the end of the day, when we're looking at these type of things, we can see like in real time, because we could drop this to the seconds or minutes and see in real time the correlations between these pairs. Okay. Now, in regards to the Forex correlation chart, yes, Doctor, good morning. Yes, it's something that we look at all the time. All right. But the reality is the correlation charts, it's good. It's a chart. Yeah, you have to understand how you're going to look at the chart, what time frame you're going to look at the chart, and what is you're looking at. This is the way you should use these correlations. You should just understand that if you're in the markets in multiple pairs, it's about balancing your risk, and understanding how to hedge. Because if you was, for example, if you had a correlation, if we went to my Forex book and we went to their correlations, and you was in the pair and they had a 90% correlation that they both do the same thing, okay, over a certain duration of time, and you was in one for the sell, one for the buy, we've spoken about this. We've got videos of this, that more than likely, one of them you're going to be wrong on, okay? But let me explain something about this correlation with how people who use it incorrectly. You have to understand that the correlations there's a few things. For a start, you have to be very confident about how frequently this refreshes, updates. You see, this is the whole point about like people that use indicators and stuff, yeah? Is you've got to have a lot of confidence. You've added another variable into your analysis. So for the business analysts, people like Alan, etc., we understand about variables. We understand about trying to control as many variables as possible. As soon as I add this in here, yes, it's good. It gives me a visual representation. For example, I'm looking at here at things that have a 90% correlation above and below within a time frame of 1 day. Now I could go down to an hour, change that time frame. But the whole point is, first and foremost, a big question I'd be asking is, how often does this get updated? Is this getting updated in real time? Or do they update this every hour? Or do they update this every 4 hours or every day? For example, there used to be something which is called I'm trying to think of the website. It's like a heat. What is it called? It's going to come to me in a minute and I'll pull it up, yeah? But when you go and look at that chart, it says in very, very small print that they update it every 24 hours. It's 24 hours old. You know what I'm saying, yeah? So that's the first thing we got to ask ourselves, because we've added another variable. So we can't just use this alone and be like, okay, look, there's 92% correlation, because these things change. But it is a good visual representation. Meaning, for example, if you was in EJ, which is a 92%, Euro JPY has a 92% positive correlation, meaning they do the same thing as AJ. So if you told me I'm buying EJ and selling AJ, and I'm trying to get in and out of the market in the next hour or so, or within a couple of hours, I'm going to be like, it sounds a bit strange. It sounds a bit strange because they normally do the same thing. So yes, this is a good visual representation to it, but you can do the exact same thing with what I've just done here. By overlaying the two different currencies, and every single one of them you have, there's a Dixie, Bixie, Jixie for Japanese yen, there's all of them. You can do the same thing with all of them, and at least then you haven't introduced additional variables which may skew your opinions. Okay, me personally, guys, market structure, price action, being able to see what the market has been doing is enough for me. It's enough for me to be able to tell and be like, okay, this is what the market's been doing, let me watch it. And of course, we want to look at fundamentals. I showed you yesterday how I was slipped in a position, and that slippage took 10 times away my risk. It was 10 times worse because the slippage was a huge impulse bullish that happened in seconds. And by the time the broker realized and got to my order to close my position where my stop loss was, I was 10 times past my risk. Oh, whoops, I just accidentally pressed spacebar. If you press spacebar, guys, it will move on to the next pair that's in your list. If you have any list, go back. Okay, so let's have a look at what's been going on here and what happened yesterday. Okay, and why yesterday that was it was a good trading day. All right, so this market we can see here, all right, understanding how we break down our structure, Russian doll theory. When I'm drawing in my trend lines, I must touch the last low before the highest point. Okay, I feel to delete everything off my chart and we start again. I hate doing here's one I made earlier. All right, I like to start every single, because the bottom line is that it should be the same. Yeah, there's just nothing should change. It should be the same. Okay. Now, if we have a look here, let me zoom all the way out, like so, like so, like so. Okay. So we can see here that the market was bearish, making lower lows, lower highs, lower lows, lower highs. Now, why is my trend line like this? Because I'm touching the last low before the highest point of that impulse. Okay. And we see that the market came from up there. Have a look. Let me drop my time frame down to the daily. And on a daily time, because remember, our strategy works on all time frames. It's not like it works on a particular time frame at a particular time of day. It's market structure and price action. It's the building blocks of everything. Okay. And we can see that the market was pushing up, making higher highs and higher lows in here on the daily time frame. Now, on that daily time frame, what we're looking for is we're looking for an indication of what the market wants to do by breaking previous structure, especially swing structure. Swing structure, I like to define as when you draw your line, it's whatever data points are touching that line is going to be your major structure. There will be structure in between that is not touching your line, but that will not be your major or your swing structure. It'll be like your minor structure. Okay. And we can see how this market here, how do I draw my trend lines? I draw one edge, which is normally the edge. If it's bullish, it's the bottom edge. If it's bearish, it's the top edge. Okay. And then I pull out a parallel line because I'm not going to hit the button when it touches my lines. This isn't Snap. I'm not playing Snap or Atari. It's a guide to show me the energy of the market's been trading within. So as you can see here, the market can narrow up. It can narrow up. Hence the reason why I've pulled out another one here of the market trading within this range. But this is yellow line is my bigger Russian doll. I'm not expecting this to start busting up past this yellow dollar and getting higher and higher and higher and higher. Because this, I have understood that markets are contained within other structures contained within larger structures contained within larger structure. So therefore, when I'm doing my analysis, this yellow line is a hard wall for me. It's a hard wall. Now, can the markets have some manipulation and push up and wick up above it? Yeah. But where candles close, am I expecting to see it start closing and breaking structure in this direction? Well, no. Can it do that? Yes, it can, because it can do whatever it wants, but I'm not expecting it to do that. That's my hard wall. To have a look, for example, here, let's understand via back testing, for argument's sake, of how we would have gotten into this trade or gotten into this market early, okay, when that market came up and touched our hard wall, okay? All right, so I'd be looking at this pair here, for example, and this market has come up and I'm saying, look, we are in a premium. We are at the top of a range. It's very, very simple. That's why we try and keep it simple here. When the market's at the top of any range, whether that's bullish, whether that's bearish, whether that's sideways, yeah, at the top of any range, we understand it as a premium. If you went to the shops to buy something and it was at the top of the range, you'd be buying it when it was expensive. If you was going and buying PlayStations and, you know, over time they've been going up in price and you was going to buy it up here, you'd be buying when it was expensive. If the price was falling in price, these PlayStations, and you went to the shop to go and buy a PlayStation and you just coincidentally happened to get there when the price was up here, you'd be buying when it was expensive. Regardless of the fact that the price is falling or getting more expensive or generally staying around the same price, doing this, you'd be buying expensive. So at the top of any range, i.e. we're at the top of our bigger Russian doll, that yellow line, is a premium. And people like to sell from premiums. Because if I bought something cheap and then it went up to a premium, I'd have a lot of psychological pressure that I'd like to sell that thing right now and take some profits. You hear people turn around and say, there's profit taking. Well, this is the explanation of that. Is when things get expensive, people want to take their money. Okay? And that happens in any trending market, whether it's bullish, bearish, or sideways, and vice versa. When things are at the bottom of a range, means it's discounted, it's cheap. If you was to get there in your PlayStation, I should really put that back now. If you was to get there and you just happened to get there at this date, and you go to buy your PlayStation, you'd be like, oh, whoa, 100 quid for the PlayStation. Wow, that's good. Because you're looking and understanding that this market, they are getting more expensive, but that £100 is cheap within that range. Yeah, but right now, being right at the top of this yellow range on a much, much bigger picture, we are in an overall premium. You understand? We're in an overall premium for how this market has been trending down. So therefore, my overall bias is, okay, on a much bigger picture, I'd like to sell. That doesn't mean I can just hit the button for the sell. That means I still have to wait for confirmations to show me that there is some, selling pressure coming into the markets, because the markets has been bullish into that premium. The markets has been going up to get to that premium. So I can't just start saying, yep, I'm selling it now, because it's been showing me that it's actually been going up, making higher highs and higher lows and higher highs and higher lows and higher highs. Now, on any time frame, I have the ability to get into this market, but I'm going to drop it down to make it more realistic for us. This is our 4 hour. Okay, so have a look on our 4 hour time frame and actually look. So if this market was going up, imagine, I'm going to rewind this some more, but I don't know, is it this one? Can you? Yeah, there you go. All right. They've changed it. They always keep adding some stuff in here. All right, which is, I suppose, is good. Shows that they're doing updates. All right. So this market was making higher highs and higher lows. If I was to draw some lines in here, I'm going to drop to my hour. Now I can see it here, but look, here's the first line I'm going to draw. This angle where the market is touching some data points in here, but we've seen how the market has accelerated in here. Now, why have I drawn this line like this? It's because I'm touching this last low on the 4 hour anyway, before this highest point. Let me drop to my hour to get more detail, because I'm just seeing all these green candles. I'm not getting enough details. Okay. Look, this is still an hour. Every single one of these candles is still an hour in time. So if I was watching this market coming up towards this premium up in here, I don't know when it's going to change, but I'm looking at this market doing this, and I'm drawing my line like this. Why am I drawing like that, my line like this? Because I have to touch the last low before the highest point. Okay. And if I've touched the last low on this highest point, then we can see that for a period in time, this market started to do the hokey cokey. The market came up to my premium, and then all of these people that I'm talking about, thinking about taking profits, thinking to yourself, you know what, I think now's a good time I take some profits. I'm not too sure I should sell. And this then goes back to so many different factors, different markets, etc. Think about people that are in cryptos that we're trading. We had an event about meme coins and shit coins. When should I take my profits? People don't know, because greed is that, wow, this has been going up and up and up and up. It should just keep going up and up and up forever. But if you're understanding about taking profits, you'll be looking at like, bro, this is expensive right now. Like Air Force Ones are £600, bro. How much more expensive do you think they're going to get? I think you should sell your ones that you bought at £50 at the start of the year and make 550 quid on every single Air Force One, because I don't think they're going to go to £10,000 in Air Force One. I mean, I may be wrong, but it seems unlikely, because you're in a premium. So as soon as the market comes up in here and starts going sideways, I'm watching this with like a hawk. I'm going, okay, we've come up to our premium level, and now this market is no longer, look what it was doing before. Look, higher highs, higher lows, higher highs, higher lows. Now, starting to think about it. What a coinky dink is thinking about it right on my yellow line, my premium, my wall, my ice wall up here, yeah? It's thinking about it. And I'm waiting for a clear indication. And an indication we've identified, that we made it very clear, is a closure below structure. So can you see the structure in here? I'm looking for a solid closure. You see these wicks start to cloud. They start to cloud the closure. I want to see a closure. This wick doesn't wash for me on the hour time frame. Yeah, this wick doesn't wash for me. This wick doesn't wash for me. Maybe this is a closure here below this wick. Yeah, we could say this is a closure here. But then when I see this closure, then I then need to see that's saying it's an indication to me. I don't want to see a correction, but that correction cannot break the previous structure. All right. So if I was to draw some structure in here, this market, as hazy as it is looking like this. I'm going to draw that in white so we can actually see what's going on. Let me just stop it here as it goes. This closure that happened over here cannot push back and break this structure, because then it's fraff. Obviously, I can drop my time frame down, guys, and we can get a bit more clear in here. All right, which I will do in a minute. Okay, but it cannot break this structure. So I'm waiting for, that's an indication. After I see an indication, it's not a great indication, so we'll see if there's a better one. I'm waiting. I know that the market moves in waves, so I'm awaiting a correction, because all of these red candles on a higher time frame create some imbalance, create one big candle. So I'm expecting to see some sort of correction. Let's go in my 4 hour here. Let's go to my 8 hour. Let's go to my daily. Okay, so say for example here, when this candle closes, we'll be able to see there'll be an imbalance between the wick of this candle here and where the candle closes. So I'm expecting to see some sort of correction. Go back to my 1 hour, all right? Before we see some sort of continuation, all right? But let's see, because I'm not just hitting the button. I'm watching the market structure to see what it tells me, okay? All right, so we can see here that obviously, for argument's sake, we said that this was an indication. I don't like all of these wicks, wick action. This could be a correction. But you see here, we on a 1 hour time frame, I'm not happy with these wicks. I want to see a closure below here before I get involved. I'd like to see a closure. Now, on a smaller time frame, we may be able to see something, but it wouldn't be what we're looking for because it would have broken structure against us. I'm going to show you, all right? And I'll show you how this strategy keeps you patient. All right, let me play this forward a bit slower. That moved very quick. Look, good job we didn't just jump in. All right, because this market is kicking back here. That's why the wick scenario is why I'm saying I'm not happy with these wicks. I want to see a closure. All right, look. Oh, this is jumping around. I don't know why it's jumping like this. This is pause. This is playing. I don't even know pause. But it's gone mad. Like, it's not responding how I want it to. Pause. Stop. There you go. All right. So look, all of this wick action on a 1 hour time frame, I wasn't involved because I'm like, I don't like this wick action. I haven't hit the button. Someone else did hit the button. As soon as they hit the button, look, what started happening. Stop loss. Now, when this market came back up into this level over here, have a look. When this market pushed back up here into this level, remember what I speak to you about, that 50% of that consolidation range, which is about here. Yeah? This market came up to 50% of that consolidation range and realized that the altitude up here, the air is too thin. Because I said to you, when you start seeing closures and structure above 50% of that consolidation range, the market wants to go bullish. But if it comes up here and boom, we see a reaction up here. So I would have been watching this market and seeing it come back up into this level. And I'd be thinking to myself, when we get back up into here, can I see any market structure that shows to me that it wants to become bearish? Have a look and drop my time frame down to 15 minutes. I want to rewind this back without it going mad. So imagine you're waiting now. So what was happening is you was waiting to see this market turn over patiently. On an hour time frame, you wasn't getting nothing, so you wasn't in the trade. Yeah, let's drop our time frame down to a 15-minute as the market started to come back into this level. So when it starts to come back into this level, have a look. I'm going to be drawing my lines once again. Now, why does this line look like this? It looks like this because it is touching the last low before the highest point. Now, you might not be able to see it, but I can see structure. Doesn't matter about the colors of the candles. The colors of the candles are a new phenomenon. They were like a jungle, green and red. You can change these colors into whatever you want them to be. The reality is that you have to look at the formation of the candles. You'll see, I'm going to drop my time frame down. It's going to look very clear on those white lines of where the structure is. Yeah. You could have also had an angle looking like so. Because on a bigger time frame, this is the last low before the highest point. On a smaller time frame, which I'm going to show you now, on the 15 minutes, I can see it. But if we drop to, like, for example, the 5, hopefully it gives me the information. See? Look how accurate the structural lines are. Because I could see it, even though you can't see them in the green candles, I can see the way the candles are moving, and I know this is structure. So on the 5-minute time frame, this market has come up to that 50% area that we'd be watching. We'd be watching like a hawk, like, okay, let's see what happens here now. 50% of where the market started to think about things. Remember, the market was going up like a missile and then got to an area and started to think about it like, well, I'm not too sure whether we want to step past this area. So therefore, when it comes back up there, I want to see whether or not it's big and bossy now, whether or not it's now got some new gusto and thinks to itself that it can actually go across the border. But look, it comes to the border and goes, nah, bro, I'm not too sure about it. And if I was watching it on a smaller time frame, I am waiting for an indication, breaking this structure to show me what it wants to do. Then I'm sitting patiently and looking for my correction, correcting back in here. And we know, because we understand how to trade, that when markets correct, they are looking to come back and close up imbalances, inefficiencies in the market. So for example, if I was to rewind this here like so, all right, and I'm looking at this market as it's just made an indication of what it wants to do by breaking this structure after coming back up to my 50% area and showing me, giving me a confirmation that, nah, bro, I still don't like it up here. It's too much marshland. There's aliens and monsters and tigers. I don't want to go up here. Starts to push down here. And when I see it break this structure, I'm like, okay, I straight away look, because I know there's a correction coming, because that's what our strategy is about. It understands the market moves in waves. And I identify areas that this market could potentially correct to, because it does not, markets do not like imbalances. Markets do not like imbalances. So I'm sitting there thinking to myself, yeah, this market's going to correct. Yeah. And also we can understand that the market's had to correct 50% of impulses or beyond to 618. So all of these are additional confluences I can add to this impulse when I start to see corrections happening and saying, yeah, this market's going to get at least up into this 50% area. So this little imbalance here, I'm not going to get tricked out by this imbalance here. I'm also concerned about the imbalance that's closer or past that 50% retracement level. All right. So I'm looking at this imbalance saying to myself, well, I'm waiting for a correction, and it's very possible, it's not a fact, but it's possible that that retracement is going to happen back into these levels. Let's hit play. Straight into that imbalance, closing up that inefficiency. And if I wanted to, guys, I'm not going to lie to you, I could drop my time frame here on a 1 minute or 30-second time frame and look for an entry right in here, because it would be the exact same strategy of waiting to see structure indicate, correct, and continue there. But we're going to, for argument's sake, we're going to stay here. So we've seen an indication, we've seen a correction. We're waiting to see a continuation that closes below this level. Closes below this level on the 5-minute time frame right there. So for argument's sake, on the 5-minute time frame, you could be like, okay, I'm in. My stop's above the last high, which unfortunately, because of this wick, which could have been anything, could have been news, anything. But unfortunately, in this instance, you're going to have to place your stop here. Okay, now let me show you something. I'm going to show you where I'm talking about that 1 minute entry over in where it would have been in here. Now, in this instance, the higher risk entry from here, I'll show you. Let me drop my time frame to 1 minute. God willing, it gives me the data. No data. Unfortunately, no data. But in here is an entry. Now, the aggressive entry, placing your stop above this high, would have got you stopped up by this wick. For whatever reason, this wick was very volatile. This could have been news, anything like that. The safer place where you'd place your stop above this swing high would have kept you safe. And you hear me say every morning, when you take a trade, you have two options. One option is that you're going to get in very aggressively, high risk, high reward. The other option is that you're going to get in low risk, lower rewards. So this would have been a lower risk stop with an entry. I'm telling you there's an entry in here. It's not giving me the data so I can show you it clearly. There's an entry in here as the market indicated, corrected, and continued on a smaller time frame. Okay. Or here, if you wanted to go there, indicated, corrected, and continued on a smaller time frame. There's a better entry around about here or here, depending if you went to seconds. And that aggressive stop above that last high over here would have got you stopped out by this wick, is what it is. Your safer stop above the swing high, you would have been calm. Okay. And have a look, because I haven't hit play yet. I might get egg on my face. Don't think I know what's going to happen. It might still be trickling up here for all I know. Let's hit play and see what happens. All right. Now, at this point in time like this, now we're going into a new problem. Here's our new problem. Now we're in this trade. We got in here lovely. You know, this trade starts falling down. We're going to hell. Everything's going good. Our new problem is, where do we get out? And where is this market going to? Now, the only thing that we can do is we can't just guess and have a little feeling in our gut. We have to look at structure for targets. So for argument's sake, here is structure. Here, down here is structure, actual where it's originated from, but here would be a level that I'd be interested in for some structure. Because the market couldn't break past it at one time. Look, it came up here, bang, hit its head, and on a smaller time frame was consolidating up here until it mustered all of this gusto and had to smash past that battlefield here with strength and speed. Yeah, this would be a level, and I could keep writing in these levels. Let me make them, they're green at the moment, of different levels of structure. Yeah, we could turn around and say here is structure. We could turn around and say here is structure. Yeah. Now the bottom line is you're looking at like this, depending on what time frame you entered the trade, depends on what Russian doll you need to respect. Now, if you've got your stop loss above this swing high, you're in a strong position because we are not expecting on any time frame. Forget about smaller time frames. I am not expecting on any time frame for the market to come up here. So for argument's sake, if you was to get into this trade with your stop above here, I'd say you're in a very strong position. It's a 10 out of 10 trade, 9, 10, because your stop loss is above an area that we are not expected for it to go up here. Unless there's some mad news or something changes or there's some manipulation, I am not expecting nothing up here. So for argument's sake, if you got into this trade, not here, but you place your stop above these highs with your spread times 2, even looking back at previous structure, making sure wherever I can't be bothered to go back, all right? Making sure it's above the structure. You're supposed to be nice. You're supposed to be able to go to sleep on this trade if it starts to break higher time frame structure. And we can see here from our perspective on this push up here, because I've identified the structure with these little white lines, white lines, white lines. When this market has broken our structure, corrected, making a lower high, and made a lower low, breaking some more our structure. After this, I'm expecting a lower high, but I'm expecting it to keep going without breaking the structure. Let's hit play, see what happens. Delicious. Yeah, delicious. Let me pause this. I don't know why this thing like gets carried away. Stop. This market is indicating, correcting, continuing. And as it continues, it's breaking structure, which is giving another indication. Then it's correcting. And then potentially continuing on and on and on to the break of dawn until you can see here. Now I can see that this structure here is very likely a 4-hour structure. Let's have a look. So on a 4-hour time frame, we can see some structure here. Yeah, as the market pulled back. We can't necessarily see these white line structures. Yeah, but on a 4-hour, this is clear 4-hour structure of where the market pulled back in, had a little sit down, and then went through here. Yeah, and then the swing structure, as you can see over here, marrying up on another time frame, is sitting down here. Now I'm looking at this market right now, and I'm saying, look, this market has just wicked below, hasn't closed below this structure. What a coincidence on the 4-hour time frame, but it's wicked below on smaller time frames. If I go back to my hour, therefore, this here is a break, an indication below this level of what the market may want to do on a smaller time frame, not on a 4-hour, but on an hour. And after I see that indication, what am I expecting? What am I expecting after I see the indication?
Correction.
Somebody knows. Say again.
Correction.
So when I'm in this trade and the market starts to kick back in this direction, I'm calm. I know this is coming. It indicated it broke structure. It's got to correct. Furthermore, I'm even looking at these levels in here and thinking to myself, boy, this market might correct all the way back up into some of these areas of inefficiency. So therefore, if I was in this trade, I'd be in a crazy amount of profit right now. I'd be over the moon. I don't need to sit in this trade and work brain of I can predict the future and I'm going to stay in this trade for the next 3 months. The aim of this game is to take the monies and run. So if I'm in good profits here, I'm going to be closing out my position. I'm going to be dropping my time frame to a very small time frame, maybe the 5-minute, or even let's say 5-minute. And if I see a break of structure against me on a 5-minute time frame, like it wants to do something else, like it wants to retrace, I don't need to sit in the retracement. Why should I? Why should I be here up $1,000 and sit in the retracement all the way back down to $400? Why? Why should I? If I have the ability to do so, i.e., I'm in front of my computer, why should I? Why not take my 1,000 quid over here when it starts to retrace, breaking structure on a 5-minute time frame? So my 1,000 quid goes to 900. Why not I take my 900 quid? Watch this market kick all the way back up into where I think it may be retracing to anyway. Yeah, which may be up here. I don't know if it goes up in there straight away. But either way, I'm watching the market make its retracement. And then when it then starts to break, indicate, correct, and continue in the direction that I think it may be going, then I've got the option with the money in my pocket, not the money floating in my MT5, the money in my pocket to decide whether I want to go back, get back in. Because you have to understand, you don't make no money until you close your position. There's no point saying, yeah, I'm up £2,000 in DAX. Well, if that thing retraces, goes back to zero, well, you made zero. Okay? So at the end of the day, look, have a look. This market, look, we slap TP1 structure, smash through TP2 structure, smash through TP3. For all you know, you're up a crazy amount, depending on how you got your entry. Because remember, we saw there were smaller entries. This could be easily being a 1 to 10 trade or more if we was able to get the data. You're in, like you're over the moon. You're breaking structure. Now, if you're saying, I'm one out, Jay, I'm holding, look, and remember, have a look at this Russian doll here. Can you see this Russian doll here? Let me make it a different color. You're going to another, remember when we're doing our trend lines, we're understanding that these are all data points. This trend line is significant when this market starts to indicate, correct, because now price is breaking outside of that market. Price was previously in this market here. Let me make the colors so you can see what I'm talking about. Price was previously trading within this little market here, this blue market. I'm in the blue market. And then it started to say, nah, this blue market's cack. Started going sideways. I'm outside the blue market, bro. There's green pastures here. There's coconuts. It's great. Sun's shining. Yeah. And at that point in time, if you was a blue watching the blue market, you'd be going, this is a bit concerning. Price is broken outside of this blue market. Then you'd have been looking for an indication, correction, continuation. And now it's coming down here. But this is a bigger market that it was in. It was in this range. Yeah. And you're like, okay, price is now looks like at the moment, it might be breaking outside of that market. So once again, you're like, okay, if price is breaking outside of that market, which was going to be the discounted area of this range, that's why I'd be looking to take my profits here, because there's a very high possibility the market's going to go boing, and all these people seeing, oh wait, PlayStations are cheap, going to start buying PlayStations cheap here, thinking to themselves it's going to go up to these levels. So I'd be very concerned about, the market potentially turning around here. You get me? Then after it comes down here, look at the other Russian doll. It's this white line here. Because then it's coming to a discounted price within that range. Do you understand the reason why I have this analogy here? Because those levels are significant. Let's have a look and see what happens. We indicated, we corrected, we continued. We also broke outside of this range, saying that PlayStations are going to shit. Nobody wants them anymore. They don't care about this trend anymore. Okay? They don't care about this trend anymore. And as you see the market pushing down here, the next level of concern is this trend, the bigger trend over here. Remember, this is just a guide, this white line. I don't know whether I've drawn it I haven't drawn it to the millimeter. It's a guide. So now when I'm in this trend, I'm understanding that I've gone from a premium in this white line. Look at this top of this white line. I've gone from a premium to a discount. So I'm concerned that now we're going to have some other players piling in saying, no way, PlayStations are £50. I'm buying PlayStations at £50, bro. I don't care whether or not, they're going to go down. I'm concerned. Let's see what happens. We're in the discounted area. We're kind of going sideways, smaller candles. Those guys are in there saying, I'm buying PlayStations at £50, bro. I don't care what anyone is telling me. Yeah, and so from here, when we're seeing this action, this price action, have a look. Market came down into this level. If I was to draw some lines, I'd have to change this line, watch, to here. Why to here? Because I'm touching this highest point before the lowest point that the market gets to. And if you can see in there, have a look. I'm going to show you the trade. The market starts to go sideways in here. Let me make that yellow. as all of those guys saying, no man, PlayStation's a £50, are thinking about it. They're like, listen, I want to, like, I'm buying PlayStations, bro. When are we going to pull the trigger? And then what do you see? Somebody explain to me, what do you see as a part of a retracement trade? What do you see? Scream it out. And then what do you see?
The correction.
And then what do you see?
The continuation.
And for all purposes, you could have turned around and taken that trade as understanding it's a retracement because you're breaking structure bearishly. The market is bearish. And then all this whole push is a retracement. Let me show you something and give you some gems. Is if I was getting into that retracement trade, look what I would do. I'd come from up here to the top of this impulse. Oops, wrong thing. Where is it? Top of this impulse. That's wrong thing. What am I looking for? Here we go. Yeah, top of this impulse. I'd pull this down here and I'd be very, very concerned at what? Somebody tell me why I've pulled that Fibonacci out. Somebody tell me, because I know you men are highly educated. We go over this. Let's go.
Because the market sometimes likes to retrace to 50% of the impulse.
Say that again.
I said because sometimes the market likes to retrace to roughly 50% of the impulse.
Exactly. Look at that. Star pupil at the front of the class. Yeah, with his hand up. I'd be very, very concerned about this 50% level here. Let me make it a nice big green line. And let me get rid of this Fibonacci. When that market starts to retrace, especially if at 50% level, I can see this scenario happening. What is this? Somebody tell me what that is. Just coincidentally, right at our 50% level. It's imbalance. It's inefficiency. So if I was to get into this trade, understanding it's a retracement trade, when this market gets up into these levels, I'm looking to take my profits. Or I'm at least protecting my position, understanding that when this market gets to here, which is A, one bit of confluence, 50% of this impulse, B, closing the only real imbalance that I can see of this whole impulse, I'm not going to just be sitting there thinking, oh yeah, the market's going to keep going all the way up here into space. It might do, but I'm going to be protecting my profits and saying, bro, I'm moving my stop loss right up the arse. I'm dropping the time frame down to 5 minutes, moving my stop loss right up the arse of the structure. I'm looking for any excuse to get out of the trade and put the money in my pocket. And look what happens. 50%. It clocks the 50% line. Ding, 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 ding. Whilst it's here, it says, let me just close up this inefficiency that we can see in the market here. And then immediately, watch, when it gets there, I've not only taken my profits, but because I've seen this market break outside of this Russian doll, this yellow line, showing me bearish indications, breaking structure, watch how I get in again. Because I'm here, look, have a look at the strategy all over and over and over again. I'm going to draw my trend line like so. Why did I draw it like so? Somebody repeat it for me because I've been repeating it. Why do I draw it like so? Tell me. We're making some monster traders right now. Why did I draw my trend line like so? Somebody tell me. Why?
So you touched the last low before the highest high.
That's correct. On this time frame, that's on an hour, that's here. But then I have the ability to, because I'm not going to be sitting here when it comes into this 50% area. I'm not going to be sitting here on an hour time frame. I'm going to be in here. I want to see what's going on. Like my profits are running. You understand what I'm saying? Yeah, I want to get in there. So when I get in there, have a look at that impulse. Yeah, I can draw my line like so. I've clocked the 50% line. Ding, 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 ding. And I've gone into my imbalance. Ding, 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 ding. And I can see structure here. Have a look at structure. Oh my God, it's so easy. So easy. Yeah, it's so easy. That's on what I can see on the 15-minute time frame. Even on the 15-minute time frame, we can see our entry. Have a look. It comes into our area that we thought the market was going to, and it may turn around. And then all of a sudden, the market indicates it corrects back up into some imbalance levels, and then it continues down here. Look, let me ask you guys a simple question. When did you ever see this market indicate, correct, and continue ever before in this impulse, in this run? Look. It's never happened. Look, as it's been coming up here, it's never indicated broken structure, corrected and continued. Nope. Look here, had a little indication, broke some structure here. Just about, maybe. No, I'm not even going to give it. Didn't even close below this level. Yeah, but it didn't. It definitely didn't. Maybe this could have been a correction, but it definitely didn't continue down here. Look, it came down here. There was a little bit of can't even see no structure in here, but it didn't do it. Look, here, for example, here where you can't even see it here. But look, maybe here. Oh yeah, boom, Jay. Look, he's indicating that he wants to go down. Okay, no problem. You might be right. Oh, cool. Look, Jay is correcting. Okay, yep, you might be right. It is correcting. Did it continue and close down here? No, it didn't. So I'm not in the trade. And then a coinky dink that it comes to our 50% level also taps into the imbalance that we've got identified that the market doesn't like. And then all of a sudden now we indicate, we correct, and then below. Guys, I don't know about you. I am in the trade here. Either aggressively above my last high on the 15-minute time frame, or safer above this swing high over here. Either way, have a look. It didn't happen. It didn't happen here. As soon as I saw it indicate correct and continue here, that's the sound I heard. What's that guy doing? There's another guy who does that sound. Yeah, I like that sound. It's the money sound. Yeah, it's the money sound. So look, what I'm showing you is not like it's my opinion. I'm saying to you, look at the markets. The markets, when we got our signal, because remember, when you got your signal here and you chose to get in here, you didn't know nothing. You just saw the strategy play out, indicate from our area of interest, our point of interest over here, 50% and imbalance. You've seen an indication correction continue. You haven't seen an indication correction continue nowhere here, nowhere here, nowhere. And then all of a sudden you see it here. At that point in time, my brothers, you have the green light to get involved. And that's on the 15-minute time. Let me show you the better entry. You ready? Drop my time frame to a 5-minute. Because I said that you guys are allowed to be on a 5-minute. Now, I do get down to 1 minute, but I don't want you guys necessarily in the 1 minute time frame because it's dangerous. But have a look here on a 5-minute time frame. We've got an indication, correction. Maybe you would have got a slightly better entry. Yeah, just about here. It's the same. Just stop maybe above here. It's the same. Very similar on the 5-minute time frame. Have a look at the 1 minute. Let me show you how the markets are fractal and how I would have gotten on a 1 minute. Oh, it's not giving me the data. Come on. Let me go to 2 minutes. Let's see if I can see on the 2 minute. How I would have been telling around and saying to you that I got in early. It's not giving it. It doesn't show it. Yeah, but it would have been here. Have a look. Right here, you see this line here? I'd be drawing a line like this. Watch. Why am I drawing my line like this? Because now I'm touching the last low before the highest point. Yeah, and what I would be looking for is I'd be looking for an indication pass here, a correction, and a continuation that we can't really see in here on this smaller time frame. We might have been able to see on a 1 minute, but it's not giving me the data. Yeah, but that would have been an interest for me to be able to get in on this. Why? Because look, we're looking here and we would if we've never seen it before, then all of a sudden we start to see it from our point of interest. Because look, the market is going sideways in here. The market has come up to an area of interest that we're interested in and ultimately started thinking about its life, thinking about what it's going to do next. So I'd be waiting for an indication, correction, and continuation outside of that thought process that we can't necessarily see on a 2 minute time frame. All right, let's fast forward now. Let's go to real time. All right, because we're coming to the end of the session. Let's go to real time right now and see what my thought process is about this. All right, about what's been going on. Let's close this. Let's come out of here. Let's reset the charts and let's see what I think's going on right now. So right now, in my opinion, if I go to the 4-hour time frame, from our premium up here, the market started to break structure. This here was a break. Have a look at huge indication of what this market wants to do. This market is saying it wants to go down. It says it doesn't like this premium level. The air is thin. But you know what it did? It corrected massively to this level up in here, and then it has started to go sideways. We know why the markets might be going sideways. Yeah, we understand that these markets right now, there's a lot of things going on in the world right now. Yeah, a lot of news, a lot of this, a lot of, you know, interest rates, a lot of speeches, etc. But this market ultimately is going sideways in here. Have a look at this on a bigger picture. If I take from the impulse up here down to here, this market is going sideways around this 50% area. And I always have this golden zone in here around the 618, around this area, this whole area here. This whole area is around areas where we see markets retrace to. Still respecting this higher high, still respecting our hard ice wall of a trend line. Okay. And therefore, this market at the moment, I'm expecting for this market to come and make a lower low on a much bigger time frame. But on a smaller time frame, I have the ability to, for example, can you see it here? If I was in this trade here, when this market was doing this, trading within this range, I understand that above this range, there is something building up called liquidity. Yeah, called liquidity. Building up above any range, any consolidation, even a trend line liquidity builds up above a trend line, but it's a bit more, you need a bit more balls to bust outside, pause, that trend line, that bigger Russian dot. But when I see this happen, watch, I'm showing you something. All of this bullish action, look, boom, 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 and then it busts out here with strength and speed above this level here. When I see that market bust outside here with strength and speed, let me tell you something for free. I am not, let me say it one more time. I am not expecting this market to bust this solid ice wall. I'm not expecting it to. So this just looks like a nam liquidity grab. That's what it looks like to me. And if I wanted to, I can draw my lines in once again. This is the range that this market was trading up within. It's pushed up in here. If I wanted to get more accurate, I can draw another line like so, touching the last low that I can see before the highest point. Let me show you something on a 5-minute time frame. You can give me the data. Look, the market pushes up here like an absolute berserker. Boom. All right. Lots of volatility pushes up here, but when it gets up here, it starts thinking to itself, right, the air is thin up here. Can't breathe. I've got a headache. Starts to go sideways in here. And then what am I waiting for? I'm waiting for an indication. But look at the structure. Here's the structure if you can't see on this time frame anyway. Look at the structure. The structure is the market was pushed up into here, making sideways action, equal highs and relatively equal lows. And then it goes indication. All right. Then it's going, this is all correction. All of this energy it's allowed to correct up to this level. So all of this fraff of it going sideways it's on this bigger time frame. It's allowed to do all this fraff. I'm waiting for a solid closure. Let me see over here. Have I got a solid closure there? Let me see something. No, this isn't a solid closure because look at the wick. None of these are solid closures. This is just fraff. Yeah. But ultimately, watch. What you could do at this point in time is you're waiting for a solid closure below here. Okay. So you could look at this from a smaller time frame, looking for indication, correction, continuation over here. But the reality is look, as this is indicated and all of this fraff has happened, at the point when you got a closure below here, that could have been you in the trade on the basis that the structure, which I just deleted, is, on the basis that the structure from up here was an indication. This is all correction, fraff, wherever way you want to take it, wherever the highest point is, which is the highest point. And then you finally got a closure below here. If you really wanted to, that could have been your signal to say, I'm in aggressively above the last high over here. I'm showing you, this is on a 5-minute time frame, but you're going to see when I zoom this at an hour or 15 minutes, this is just going to look like a point like that. That could have been your entry there. your aggressive entry on a higher time on a higher time frame, and your safer entry stop on that time frame will be above here. So let's look at this. I personally wouldn't do this because I'd be waiting for it to clear this level, but because I'd be dropping my time frame down. I'd be trying to see what I could do here, whether I get that confirmation on earlier entry. And when I got that earlier entry, the safest place to place my stop would be above this swing high. You see, that's the safest place for me to put a stop. And for the fact that this market is ultimately being fraffing about, yeah, it's not being definitive. It's kind of been, look at this, fraffing about. You'd have to use some discernment and be like, I'm going to place my stop above this, a mountain height. Because you placing your stop in somewhere like in here when the market it's not yet decided. It's still kind of mucking about a bit. Still mucking, it's still messing. Do you understand what I'm saying? Yeah. I would be placing my stop above these levels. Because look, have a look. Let me show you another reason why. Look, within that range, have a look at this. Let me draw a little line from, if I could just move out of the way. Look. I'm trying to touch some data points. Yeah, I'm trying to touch some data points. Remember I said we're in here, we're touching some data points in here. I am saying that I always want to be selling from a premium. But when this market came up in here, have a look, and I'm in the premium, that's when I would be like, okay, we're in the premium. We're not in the middle, which is purgatory, which is equilibrium, which is, I'm not too sure. I'll be waiting for when we get into a premium, and I'll be dropping my time frame down. Have a look, I'm going to do it in a 1 minute, hopefully giving you the data. Yes, yeah. And I'll be looking for what I look for. I'll be saying, look, have a look here. The market was here and we traded up within a premium. I'd have to draw a line like this. Why would I draw a line like that? Because I need to touch the last low before the highest point. And then what am I looking for? I'm looking at that point in time to see whether or not this market's going to make an indication breaking structure. Have a look. Boom. And then a correction, boom, and then a continuation that happens to be about here. And this could have been my entry. Not that massive entry. This could have been my entry. Someone's saying, but Jay, look at over here. It did it over here. It didn't break structure. Look at where the structure is. It's down here. The market came in and was mucking about. But when it came down here to actually break some little level of structure, it didn't continue. Someone's saying, yeah, but what about over here? But look, the market came down here. Look, it's just wick action. There's no real clean closure. The first clean closure might be here. This red candle in here. But then did it continue below here and do any closure below here? No. The only place it did that when we saw some structure in here was here, making a clean indication, correction, continuation. That could have been my entry. And if that was my entry, have a look. Yeah, breaking outside, and I've dropped to my 1 minute time because I'm just showing you that these Russian dolls exist. This structure is contained within this structure and in this structure. That strategy works on every time frame. The only issue is are you patient enough to sit around for 1 hour candles? Have you got the nerve to be in on a small time frame and to see 1 minute and be discerning enough to be able to zoom in and zoom out and see what's going on? And have a look at this right now. You see how it's coming down here from a premium? Let me hit play. When it starts getting down into here, what am I concerned about? What am I concerned about when we've come from potentially a premium level to down in here about these PlayStations? What am I concerned about for anybody who's been paying attention for the session? Come on. What am I concerned about if we've come from this premium little range up here and I've taken a trade and now we're all the way down into this lower part? What at the bottom of any range, what's happening?
The buyers start kicking in.
Yeah, the buyers are starting to figure to themselves, you know what? Damn, I don't know. I'm not too sure. Maybe I want to buy from down here. So I would be protecting my position like crazy, moving my stops or just taking my profits at this level of structure here. Look. where there was a previous battleground where the markets couldn't break until boom, and then it broke there and sat on that level. Yeah. Or I'll just be moving my stop, which is my strategy. I'll be moving my stop up against the arse behind some sort of lower level structure, so maybe above this little 5-minute high, because I'm looking for any excuse to get out of the trade and take my money. Because I'm thinking to myself, there might be a retracement here. Let's have a look and see what happens. Actually pushed down a little bit further, have a look, and broke this structure. Now, if I was in this is why I don't stop myself out of a trade. I move my stop, I'd be over the moon now, because now I've seen an indication below this level of structure. And the market's breaking outside of my other Russian doll. This market is really looking like it wants to be bearish, but I'm still very conscious that we're down. Remember, these white lines are just guides that we're still out in this little discounted area. So even if this market wants to go down still, it may get back up in here. And why do I want to sit in here and watch my 1 to 8 go back to a 1 to 2 or 1 to 3? I don't. I'm not trying. This isn't an ego thing. I'm trying to say, look, I told you it's going to keep going down. I want to take my money. Let's see what happens. Buyers buying the PlayStation. Buyers buying the PlayStation. Back up into a premium. All right. Now we want to go down anyway because PlayStations are rubbish. But from the premium is where I want to start selling. Look at this. It's like reading a child's book. Do you understand what I'm saying? It's like reading a 2-year-old book where it's only got 4 words on each page because it keeps doing the same stuff. It's just you understanding how these markets move. Because when this market got up in a premium here, if I believe after seeing this indication below this structure that the market actually wants to go down, let's have a look at it one more time just to take the piss. Pulling from up here down to here is the impulse. What percentage did it retrace to? I'm asking. Where did the market come back to?
What's that, 50%?
50%. So when it gets up into that 50% range and I start seeing it going sideways and it happens to be also at the top of a premium, I'm like, yeah, let's go. Time to go again. I took my 1,000 quid here, watched the market retrace. I either decided to trade the retracement if I'm wicked and bad, or waited till they get back in here. And I'm like, okay, I'm ready to go again. Have a look at the market. Sideways. What am I waiting for outside of that sideways action? I'm waiting for an indication, correction, continuation. Then I'm going to be back in the game. And even if looking at how that market came out of there like a torpedo, even if that was the indication, correction, continuation here, and I took this trade here, that was eager. I'm up 1,000 quid. You guys know I've told you a million times, placing your stop here would be stupid. For what reason?
There's structure above that.
There's structure above that, and there's this thing here. We call what? Has many
imbalance.
That imbalance there, man will be like, listen, I do want to get in this trade again. I just made 1,000 quid, but I know that the market doesn't like this. So it's in my interest to, unfortunately, I can't just put a 10 pip stop. So my lot size isn't going to be as big as it normally is. Unfortunately, the sensible place for me to place my stop is going to be above that imbalance. That would be if you're so eager to get into that trade again, that would be the sensible place to put it. Here would be like you're just gung-ho, wicked and bad, you're just going crazy, and you just don't care about this imbalance. Here would be the sensible place. Well, look, even if we got in here, this market has gone down here, and like I said to you, there's no way possible that you're going to get down here for a 1-to-1 and not be in the mood of saying, you know what? It's risk-free. This is all gravy money now. You just took 1,000 quid out of the markets. You just got back in the trade again, and positive again. Your win ratio is high. And you're down here. Can this market come and stop you out here for nothing and go into this imbalance? Yeah. But personally, would I prefer that this market came and stopped me out for nothing and then you get back in here for, for a better entry and a smaller risk? I would definitely prefer that. Have a look. Let's see what happens. Now what a coinky dink. Now look. In this instance, man, I turn around and say, yo, Jay, you got stopped up for no reason. You could have stayed in it. And yeah, possible. Yeah, but let me tell you something. Me personally, for a start, I think there's a smaller entry here on a 1 minute time frame. Yeah, But I wouldn't be on a 1 minute or on a 5 minute. Look, first and foremost, guys, is capital preservation. This little wiki hokey cokey here, who knows what that was? Was that news? Was that a speech? Was that some bomb went off somewhere? Was that ships were crashing into shipping lanes or bridges in some country? I don't really know. But first things first is I just made £1,000. This market is starting to break structure against me. Have a look here, indication. And the joke is this. Look at it. It did not show us that it wants to go up on this time frame. Look, this would be an indication. Let me see. Not even. This thing's in my way. Over here. Here's structure over here. The market didn't even really show us that it wanted to go above this structure. Look. No candle close on the 5 minute time frame. Just wick. So if I was watching this, maybe I wouldn't have placed my stop here. Maybe I would have just reduced my risk. Yeah, to some clean structure. Maybe. It's easy in hindsight to say that. But I'm saying maybe because I'm watching this, I'm £1,000 up. I'm only risking 100 quid at a time. So maybe I'm like, you know what? Let me reduce my risk from that 100 quid to above this level here for $50 because the market started breaking structure here. Though I did, no. In fact, let me not elaborate it. I'm either going to leave it above here because of this imbalance, as I said, or I'm going to protect my position because I don't want to take any else. Placing my stop here. All right. I'm going to leave it like that. It's no point me just fraffing. Yeah. If you left your stop above here and you are happy with you losing $100, you just made 1,000. Well, then you'd be in the money again because it's wicked up into or close to our imbalance. Now I'm not going to say into. Didn't quite get into this little bit here on this time frame, but on a bigger time frame, have a look. Tapped into. Let me go to a bigger time frame. Hour. Tapped into the imbalance on an hour. Look, lovely. 50% of the imbalance because this is a lovely imbalance here. So on that time, the market did come and tap into the imbalance. Zoop, and then go to hell. So I suppose, yes, leaving your stop above here makes sense than moving it because you got a 1-to-1. Why would you move when you got a 1-to-1? You're up £1,000. You're only going to lose $100 if you lose. So more than likely, probably I wouldn't have changed it. But let's have a look. Let's see what happens. Because look, we've sold again from this premium level. Let me pull out this line. Let me just try and extend it to the right. No, let me not do that because it extends all my lines for the future. Let's do that. And now let me show you something. In this bottom edge, which should be at the bottom of this wick, here, we'll come back down into a discount. Yeah. And I'm looking to the left and I'm trying to see what structure is saying. Okay. Well, I'm thinking to myself that we're at the bottom and I'm concerned that this market might kick back on me. I am concerned. All right, I'm looking to the left here. I can see some little structure, but I can also see some liquidity below this sideways action in here. There was some sideways action in here. Have a look. And I can see some liquidity that will be sitting below here. So we might see a bigger push. It'd be nice if we do outside of our range, but I'm concerned and I'm protecting my position because I know that from discounts, buyers can come into the market. Let's see what happens. What happens? Buyers came into the market and I was correct to protect my ass and take my money at the bottom of this range. I was wishful that we might see a push outside of this trend, but no, people want to stay wearing baggy jeans. Baggy jeans, mate. I'm not changing the trend. Baggy jeans. So right now we're in a premium and the market's going sideways. I'm a little bit concerned of it breaking outside of this market a little bit, but it hasn't broken previous structure. So we are all right. Let's see what happens. We're still starting. Have a look. How we came all the way up to the swing structure, because the swing structure, like I said, are the ones that are touching the lines. You get minor structure in between the ones that are not touching this white line. Look, this is minor structure in here, but the major structure will be the ones that are touching on our white line. These will be the major structures. The ones in between, these ones would be our minor structures. These orange guys. The market danced around, thought about it, went sideways for a while, price even broke outside of the range. Look, this is just hokey cokey stuff. And then nam, liquidity grab above the range, but not breaking structure. Have a look at the entry. You ready for it again? Because we've been doing this all morning. So this session is one you lot can play back. Has been recorded. Let me see. Yes, and I'm going to label it, give it a good label so it doesn't get lost in the sauce. Yeah, have a look. When I'm watching this market going sideways, clearly, let me make this yellow box a different color. Clearly going sideways. It's not doing jack squat. Going sideways. When I'm watching it going sideways and I see this push, I'm thinking to myself that bearing in mind, I'm thinking to myself, this market is bearish, hasn't broken the structure over here. It's good, fast price action in here. Now, when it breaks up here, it could indicate correct and continue up here. It could do. But if I'm not drop to my 1 minute time, it's going to get you excited. Not that I really want you in a 1 minute time frame, but have a look. At the point when I have to draw my line like this. Why did I draw my line like this? Because I'm looking at the highest high. Sorry, the low before the highest point. And look at the indication on a 1 minute time frame. My goodness, my God. Yeah, I need sound effects. That's what I need. I'm gonna load some sound effects. Yeah. I need to take these sessions to the next level. Like bring it into like I need some sound effects. So this market's pushing up here, making higher high. If I wanted to, I could get even more anal with it and break this here. I'm not too happy with this as a closure below this structure. I'm not. So I'm not going to take this on a 1 minute time frame. I'm not going to go any lower. But have a look. This is definitely an indication below this level here. Below this swing structure on this smaller impulse. This is definitely a break. Indication. What are we waiting for? I don't know where the correction's going. The correction could go all the way up in here if it wants to. I don't know. I don't care. I ain't got no money in the market yet. But when the market corrects and then continues, I'm in. And I'm either in aggressively, watch my aggressive entry above the last high, over here. That's my aggressive entry above this. Let me zoom in because somebody can't see it. Somebody's on their iPhone. Their eyes are straining. Okay. Look, indication. That definitely broke this structure. Yeah. Definitely broke this structure over in here. I couldn't really take this one because it didn't really close below. It was equal. This is definitely an indication, closure. This is definitely a correction. And then this is definitely a continuation. And if I wanted to, my aggressive entry would have been here with my spread times 2 above this high. This is my choice. Am I aggressive, high risk, high reward? Yeah. Or am I going to be in here on some low risk, low? If I want to go low risk, my stop must go above the swing high. If I go high risk, it goes above the last high. Yeah. And we can see what the two of them do. Yeah. We can see what the two of them do. Oh, give me 1 minute. Yeah. We can see what they do. Here's the high risk one. And we'll also put in the low risk one. The low risk one. So the low risk one is you say, nah, Jay, I'm not in at all that getting stopped out and having to get back in and place my stop above there. Have a look. Both of them, obviously, your spread times 2 above this level. So you'd have a couple pips above here, a couple pips above that high. Look at our entry. Shh. Come on. I've done this over. And the joke is, this isn't like, here's one I made earlier. I just rewound this chart back however far it was. And I've just been watching and reading the charts. There's no way possible I orchestrated this. It's not possible. Yeah, that's our entry. Boom. Maybe you would have taken your profits down here. You didn't want to be back in this kickback. Maybe you fell asleep on it. I don't know. Maybe you zoomed out onto the 5 minute time frame and you just watch this market go and crush every single time. Now, look, it's easy for me to show you this, but there's a few things. There's a few things that dictate me being able to take every single one of these trades. For a start, am I going to be present? It's easy to do back testing and see and be able to say this is what it is, but am I going to be around? Am I going to be taking this trade here and having a trade sitting in here at midday at 10 o'clock? I don't know. Are you at work? Are you not at work? I don't know. What about the sessions? Am I going to be around for certain sessions? Am I sitting here and saying, okay, did I understand when I saw this market going sideways that it's Asian session? We understand the characteristics. Asian session is what, guys? What do we say is the characteristics? There's 3 characteristics of different sessions. Let's see if you can remember. Asian session, which is this red block, is what? Try and remember. Asian session would be what? Asleep.
Accumulation.
Oh, accumulation. But remember the way we've broke it down. Because remember, Unity or Jay, I break this down into common language. Yeah. And understanding this from a metaphorical perspective so that when you're looking at charts, you can remember. I remember that funny metaphor that Jay reminded me of there being a battle here. And us, killing the insurgents, but wanting to come back to check. I have these metaphors and these analogies because this is the way I teach. I don't teach, the consequent encroachment of the 50% of the t squared divided by 6. I don't teach like that. So therefore, these sessions have different characteristics. And the first one that Jason spoke about was in this Asian session, the US pairs that are dictated by what's happening in America. This is sleeping. And then what do we say that London session is? What do we say the characteristic of London session is?
Waking up.
Waking up. But halfway through that wake up, the coffee kicks in when New York opens up. And this is us having the energy of being what? What's the third phase? Very simple. If we were sleeping, we're waking up.
Active.
We're awake. We're awake here. And we're even more awake here because this is right slap bang in the middle of the day when we're waking up, the coffee's kicking in, the protein bars or whatever it is you're on, everything's kicking at once. The sun's shining, music's playing, and that London New York overlap is when we see action. You understand what I'm saying? We see action. And the only time we got into the trade was after seeing this signal. So someone's saying, yeah, Jay, but there was London overlaps over here. But there was no signal. There was no information telling us what we're ready to do something. This went, shh. And we're like, okay, something's happening now because we've broken outside of this range. And as soon as we see that and we see that indication, correction, continuation, as soon as it kicks off for whatever reason this day, they decided, yep, New York's here, let's go now. Man started doing, control alt, man started doing X, Y, L1, R1 and hitting the buttons and that's it. And I'm telling you guys, we can do this over and over. And let me tell you something. What I'm teaching you, in my opinion, is baby food. Simple. Because the way in which I teach it, I believe I teach it quite simply. And it's market structure and price action. Now, does that mean that you're going to be killing every single trade? No, because you have to work on your psychology. You have to understand your risk management. You have to understand that, did you get in early? There's been times when I accidentally get in early. Jason's like, the other day, me and Jason was in Discord talking. He was like, bro, you look like you got in a bit early. Then we're like, I'm not going to lie to you. I think I did. Because you know what? As much as man want to pretend that they're a cyborg, you are still human. And you do still make mistakes. You do still have FOMO. You do still, your fingers hovering over the click with the one click button and it just a little spasm happens and just triggers you into the trade. It does. These are the things you have to work on to iron out. Maybe you use limit orders. Maybe you use stop orders. Maybe you do something else. Maybe you every time you take a loss, I've said to you guys, when you take a loss, especially if it's a bad loss, delete these lines. Delete them. Zoom all the way out to your daily again or your weekly and start again. Mark it up again. Because you might have been high on crystal meth when you marked it the first time and you might have missed something. Mark it up again and say, you know what? Nah, bro. Nah, I still think it's that. So therefore, I'm still looking for that. Okay, cool. These little habits can help us to be more profitable. Like right now, everybody that, especially regulars on this Breakfast Clubs, what I'm hoping for, guys, is you guys all become my generals, man. To be able to go and teach the masses our own unity strategy. See, like how ICT got their own little drones of animals that are all, we believe in ICT. Now, the ICT owner has been debunked bare times for fraff. Don't get twisted. His strategy is definitely rooted in facts and it's rooted in results. Doesn't necessarily mean that he was the best trader. Just like when you go to school, your business teacher who teaches you business doesn't have a business. Do you get what I'm saying? But does that mean that the information that they're teaching you about tax, about how to structure your business, the theory of business, does that mean that it's incorrect? No, it doesn't. Does that mean that you can't learn from your business teacher? No, it doesn't. Doesn't necessarily mean that your business teacher is Elon Musk or Jeff Bezos. So the point is this: you can know and learn and teach this strategy. Does that mean that you are crushing the markets? No, because trading profitably is more than knowing this strategy. It's your psychology. It's your luck. Do you catch a lucky trade? It's, do you have the resilience to take 6 losses in a row and still keep to your strategy? Or at that point in time, are you telling me that you're trading something else? Or you're looking at another strategy online, you're Googling. It's your account size. Are you trading with £100 account, or do you actually have 100 grand that your daddy gave you, or your mommy gave you, or that you won, or that you sold your house? It's so many other factors. This bit of teaching you market structure and price action and what to wait for and what to understand is baby food. But let me ask you a question. If you're somebody who right now turn around and say, yeah, I know all this, Jay, I know this inside and out. If I go into your history on your MT5, can I only see $100 losses or whatever your risk is? Does it read like this? $100 loss, $100 loss, $98 loss, $101 loss, $500 win, $100 loss, $1,000 win, $100 loss. It probably, and I'm saying probably 96% does not read like that. Because a couple times you went ape back crazy. You moved your stop loss. You over leverage. You said, you know what? I know it's supposed to be 5 lots, and Jay said I should really round down to 4 lots to take into consideration my spread and to take into consideration if I get in late. But I tell you what, let's just round up to 8 lots. Woo! Let's just go 10 lots. Woo! I know that you do that because I do it, and I have done it. So I know you do it, and you know what happens? You take a loss on that. But instead of you losing $100, you lost $300. That has an impact on your bottom line. It's 300% more than you wanted to lose. This is the difference. I'm telling you. Look, we watch this podcast time and time again. It's a guy who is like a Nordic kind of guy. I think he's from like Sweden or one of them kind of countries. Blue eyes, blonde hair, goes to the gym. He says that he manages $4 million. Okay. He says that his monthly target is 2%. Not 10%, not 5%, 2%. And he's all over the socials of this great trader, profitable, making money, living his best life. He's got videos of him on the yachts with his watches and his family. 2%. Because he understands this, he understands capital preservation, and he's not trying to make his job difficult. Making his job difficult is like, I'm aiming for 20% a month. Man, I'll be like, well, that's good. That's a good look. Make your job difficult. Whereas what he's done, if you really think about it, is he's just said, listen, let me get as much money as possible and let me aim for 2%. Do you know what that means? You can pass your challenge aiming for 2% a month. It's just going to take you time. And the problem is these other factors I'm talking about, your psychology, your mental, your all these type of things, is that you don't want to wait 5-6 months to pass your FTMO challenge. It's just too long. You're just too impatient. And that's what makes you blow up your account. Not the fact that you don't understand this. Not the fact that what Jay's teaching you is not solid strategy that you can use to kill the markets and change your life. It's because the other factors, the other human factors are holding you back. They are holding you back. Obviously, we've tried to have our Discord, have some accountability. It's been quiet. There isn't too many of us in there. Nathan's popped his head in there. Jason's in there. We've had Al in there. But, we want to... And obviously, life, guys. You got to work. You got to live your own life. If we didn't have to do those things, what I'd say to you right now is let's all go into our Discord and let's just sit in the Discord all day together. Because that's what would happen in a trading floor, because you'd be there from 9 to 5 and people will be holding you accountable like, whoa, doctor, what are you doing, bro? You mad? You're supposed to be risking $100 or 100 grand or grand or whatever that 1% is. Why are you in there for $400, bro? And he's going to go, oh, my bad. Someone will give him a little slap behind his head and then he'll go back and he'll adjust his lot size. And good job he does that, because the market went in the wrong direction and stopped him out. So now he feels a lot better that he didn't lose 4 times the amount he was going to lose. But when you're by yourself, in your underpants, at home, and you're looking at the bills that you've got pinned on your board, your parking tickets, you start saying, nah, man, this one's going down right now, man. I know it. Let me just go 4x of what I'm supposed to lose. And then you blow your shit up. Get me? So I want you guys to understand this and learn what I've taught today inside and out. This session has been recorded. I will label it. You go back and do it for yourself and backtest and realize how, I'm telling you, it comes to a point when I'm inside the charts. I'm reading this like I'm reading to my son one of his books from school. Once you down pack that, at least you can now park that up and say, okay, well, we've got that. That's fine. I've got that. I've got the actual car, the Formula One car that goes very quick. Now I need to learn how to drive it. Now I need to learn how to take the G-force on my chest. You think Lewis Hamilton is just driving a fast car? Nah, bro. His body is conditioned to take G-force when he goes into that corner at 160 miles per hour. The car alone isn't what makes him the best driver in the world. So this stuff that we're doing every single morning is supposed to be like, yeah, I get this. I'm trying to work on the other stuff. I'm trying to get more money. I'm trying to work on my psychology. I'm trying to work on my risk management. I'm trying to work on understanding the session. I'm trying to work on my lifestyle of how I can incorporate trading into my lifestyle so that I'm actually there for when these moves happen. Guys, good morning, God bless. We definitely ran over, but this is a good session that has been recorded. And any questions before we finish up, guys? It is Friday, Fix It Fridays. Any quick questions? The news, I know that Al's going to tell me that today we've got...
This non-farm payroll today. If you're in a trade, close it out or manage your risk. It's going to be wild at 1:30.
There you go. Very, very, very good information. And this is why you hear traders turn around and say they don't trade with big news happening. Because why would you trade with big news is happening where it's going to... You see this book that you're reading that is in basic baby English. Why would you want to trade it for the next 3 hours? It's going to turn into Japanese. This is why you hear traders turn around and be like, I don't trade big news. Because for the next how many hours, this English book is going to turn into Russian. And I just don't speak Russian. This is why. I know some people are like, oh yeah, the volatility is going to be great because even though it's in Russian, you know, you might catch a lick. You might do. But when you can read this so easy, like ABC, why do you want to risk it for a chocolate biscuit? Especially if you've got 4 million in an account. Maybe if you've got $100 in an account, you're just like, you're just chancing it. But if you've got 4 million in an account, why would you risk it? Or if you are going to risk it, let me tell you something, what that trade looks like. It looks like this, look. Because from a fundamental perspective, you've done your work and you believe it's coming down here. So that trade is still, you know, you still manage your risk. It still might only be like you're looking at it like, yeah, I think I can get a nice quick 1-to-1 in this because of this volatility. You're not going to be in there with your £4 million account, you know, trading them, you know, you're just risking 100 grand. Or maybe you will, depends on your risk. But you get my point. All right, you understand my point. But guys, yes, there is non-farm payroll today. It is going to be volatile. Look at all of this stuff. Hectic. Yeah, red stuff. So you can either stand around and watch. You can get involved and try and close out your position before these times. But even sometimes you'll see volatility before these times as the market tries to either price things in or prepare for the news. Or don't stay away from the charts. Go and do your back testing, yo. Maybe go and back test what happened last non-farm payroll. Oh, but I don't know when non-farm payroll was. Bro, in the days of AI where you can talk to your computer, go in here, click on
First Friday of the month.
There you go. Have a look. Here's all the dates. Go and look back and see what happened. Go and see whether when price was in a premium, did it wick up first and capture liquidity and then trade down to a discount? Or was price at a discount? Did it go and wick down first and then push up to the premium? Or did it do something? You can go and work that out. It doesn't have to be an unknown. The information's here. The only problem is, and let me keep it raw. Let me say this one thing. The only problem is right now, guys, I'm going to say it right now. You haven't made no money in this market to take it seriously as a business. Because if you made some dollar, if right now your trading paid for your house or paid for your trip around your world or paid for, you know, one of your family's members' life saving surgery, you would be going back and looking at this stuff like a business and going, I want to see what happened in this day, this day. I'm not only going to see what happened, I'm going to plot it on an Excel spreadsheet. I'm not only going to do that, I'm going to write in my notes, I'm going to journal. I'm not only going to journal, I'm going to make, you'd be taking it so serious. Because you go to work and deal with shit on a daily basis. You commute in the rain. You deal with your boss. If you have a boss, you deal with the headache, blah, 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 for less. And you've got to do more. You've got to do reports and you've got to do this and you've got to do that and you've got to come in this meeting and that meeting. But I know what it is. And it's like I said, that's again the human nature. You haven't made any money from this trading thing to take it that serious. You're just like, okay, I'll do a little technical analysis and do this, and I'm watching some videos in my spare time, you know, on ICT or I don't know, smart money or something, and that's enough. That's enough for me to make it. And you might make it, you might catch some luck, but you're not really taking it serious. It's like you going to the gym, man, go to the gym, but come home and bang over donuts. You're gymming, but you're not really trying to change your body, bro. You're not really taking it serious. Yeah. So I'm saying to you, the choices are yours, guys. Yeah. And I do understand it's very, very difficult, especially when you haven't made that money, but it's what you get in is what you get out. Because I've dedicated myself to this thing every single morning. And I have seen that my own knowledge and my own comprehension of the markets has moved forward leaps and bounds. Hopefully you've seen that as well. We've moved forward from the previous strategy where we used to hit the button in the golden zone. Yeah, we've understood. And don't get it twisted. I still watch all the other videos. I still watch all the ICT videos, all your favorite traders' favorite trader, whoever they may be, whether they're proven or not proven. I'm still in their Telegram groups. I still watch what they're saying. I still have it playing in the background because I want to be the best. And I haven't pulled out tens of millions of pounds out of this market yet. But I know that from the energy that I'm putting into this, the dedication I have, I know that money's on its way to me, yo. I know. And more importantly is I can pass on this knowledge to my kids. Maybe my son's got better risk management than me. He's got a better demeanor than me. And within the first year of me teaching him this, he pulls out millions and millions out of the market. I don't know. Maybe. But that doesn't mean that I can't dedicate myself and to this skill so that at least I, you know, have this tool that I can make money on my own time. It's very, very important, guys, because I know right now, a lot of you are thinking to yourself, when that money lands, when I sell the house, when that lottery money comes in, when I get that raise, you now know what you can do with your money. I'm not trying to say throw it into Forex, but I'm saying you might try and say, no, I'm going to look at some stocks and I'm going to buy them at a discount. I'm going to look at some crypto and I'm going to buy into Bitcoin at a discount because I understand market structure, price action. I understand news. I understand this. I understand, you know, risk and reward. This is these things. And guys, I'm going to be real with you. Prior to me getting involved in finance and embarking on this journey, as simple as it sounds, not to say that I was a dumb kid, because I was a smart kid. I did very, very well in school. And in the top of, in top set maths, and despite my A in maths, and despite my A in all of my, like I did well in school, bro. But no one was teaching me this. No one was teaching me risk to reward. No one was teaching us about, you know, making money work for you and how to invest your money and et cetera, et cetera, et cetera. So the time when I was buying cars and jewelry, because I've definitely done all those things, little Timmy, who was taught this, was saying, I'm not going to go and spend £40,000 in cash on a car when I know that I could invest just 1% and get a return and trade in the S&P 500. He was thinking on that wave, and I was buying shiny cars to drive up and down, matching cars with my boys, buying jewelry from Trotters, buying high-end watches. That did nothing for me. But now my whole mindset has shifted. My whole comprehension of what is important has shifted because of being able to throw myself into the markets. And the fact that we're looking at Forex means nothing to me. Because if somebody told me, Jay, to invest in this random stock, I don't know, let me just pick a random one here, Meta, I'd be looking at the exact same stuff. I'd be like, rah, bro, like, I hear you, bro. Meta seems like a sick investment, bro. I just wish that I could invest in it when it was, you know, in a discount. It's looking a little premium to me. Now, that's not to say that it's not a solid investment, that this market might keep going up, but I just, you know, based upon my education and my understanding, I just don't really want to buy at the most expensive it's ever been. Maybe I need to look at something else. I don't need to invest in Meta. I need to invest in, I would have loved to invest in Meta when it was down here. Someone said, yeah, how would you know to invest when it's down here? Because I would have waited. I would have seen this coming down at this angle like so. And I would have waited till I got an indication, a correction, a continuation, not on a weekly, maybe on a daily, maybe on a 4-hour, as I saw in Meta go to hell. But Meta is still a great company. I can still go and read their balance sheet and see that they've still got assets here, there, everywhere. They still got new releases coming out next year. They're still doing certain things. And the fact that COVID-19, or the fact that they're taking this retracement over here, this is not COVID, over here, is a great opportunity once I can see an indication of what the market wants to do to get involved in Meta and say, okay, yeah, great, I've bought into Meta at a good price. Opposed to me just saying, somebody just saying to me, yeah, you should invest in Shiba coin. I mean, just going, okay, no problem, cool. Let me open my Coinbase and just buying Shiba. Not even looking at the chart. This is what we was doing in the crypto season. I know because I stood there around people doing this, saying, yeah, man, everything's pumping. There's a new coin. It's cool, something. Just buying. Not even looking at where it is on the chart. And ended up buying at the top. And then acting all stupid and dopey, like, oh my gosh, all my investments have just gone to zero. Because you bought at the top, bro. You bought when it was expensive. So guys, understand that what you're doing here, whether you've seen the fruits of your labor or not, they are in good taste. They are setting you up for when that money lands, or when you've got to make that decision, or when you're having a conversation, or when you want to go and get a job, you know, dealing with these type of things, that you can look at it from a discerning perspective and be like, man, it's kind of expensive right now, man. It's doing really well, but can you buy continuations? You can buy continuations, but I would prefer to see this market break outside of the range. Yeah, do this and then do this. And even then I'd be concerned of, why am I buying Meta at $800 a pop? What is the market cap for Meta? How high could Meta actually go? Because even if it goes up here, I'm investing in Meta with no leverage. I'm investing in the stock. So it's only going to go from here to here. What is that? Like, you know, a couple X's? Am I better off investing in something else? Of course I am. Is this a solid investment? Yeah, possibly. But you get my point. This is just a random pair. Random pair. We can go and pick anything. Let's have a look at NVIDIA. We know NVIDIA's been doing fantastic things. All right? But unless, like I said to you, like you're trading, you're looking at this NVIDIA market. Let me delete everything. You're looking at it quite short term, as in looking in a trend in here short term and buying in a discount for a short term gain, which you can do. You can trade these stocks for short-term gains or options for short-term gains. But on a bigger picture, you've got to take into consideration, look, let me just zoom to the weekly. You've got to look at this on a bigger picture like this. That we are in a premium for NVIDIA. Look, when we was up here, NVIDIA was doing well. Let's not make it to say that NVIDIA can't retrace. It retraced from here. Do you think that people wasn't saying, right, NVIDIA is doing great when it was up here? They said this NVIDIA is doing amazing things. Look at this. It's been bullish. It retraced from there. So why couldn't it retrace from here? Not that it's just going to keep going like this up in space, because the markets we know don't move like that. They move in waves. So why would I want to buy here when I could buy down here? But you know, the natural mind, the natural human instincts is like, yeah, man, NVIDIA's going good. That'd be a good place for me to put my money right now, because I've heard that NVIDIA. If you've heard on the news that NVIDIA's doing great, it's probably too late, bro. You want to hear fear and greed. You've heard about this fear and greed index. Can anybody explain to me the fear and greed index? I know somebody knows. Fear and greed. Does anybody know the relationship when it comes to the markets? They talk about fear and greed. Anyone know?
When there's fear in a market, you buy. When there's greed in the market, you sell. Basically, is that what you're saying?
There you go. So when everyone's greedy, like, oh my gosh, NVIDIA's going up and up and up and up. Let's get greedy. Let's put more in. That's the time you want to be like, bro, I'm taking my money, bro. And when there's fear in the market, oh my God, NVIDIA's going to hell. Look at it, it's all the way down here. That's when you say, okay, no problem, bro. I'm getting greedy, bro. I'm going nuts over here. I'm buying everything they have. These are things that we've learned. These are not only for the markets, these are life skills. When men are being greedy out here, bro, we should step back, bro. And when man are fearful, if you really want to be that person to actually, you know, break new ground and do certain things, it's when the fear kicks in, is when there's great opportunity. Look how many people were buying pieces of paper to wrap around their face. I'm saying. What other time could you sell people pieces of paper for £2 to put around their face? Tell you when they're bloody scared that somehow these little piece of paper is going to stop the particles from giving you some killer disease called COVID-19. Guys, good morning, God bless. Yeah, have an absolutely great day. I'm going to stop the session, pause, finish recording.